Hello everybody, welcome to my weekly video, and this video is going to be about the gold because I have a lot to tell you about gold, and we have so many charts we could actually go through, even gold silver ratio. Everything is interesting. I'm afraid I do not have so much time in this 10 minutes, max 10 minutes video. So let me just go through like the two stuff that I just really want to talk to you about. So stuff number one, point number one, I even wrote it here in the text, will likely be a process of making the first peak in a circular gold bull market. So what do I mean by this? So when you look this, we are now very zoomed out. This is not even monthly, this is 3 months, this is quarterly chart, okay? Like how to maybe go to yearly chart, but we could actually try that even, to be honest. I'm all for it. Yeah. On the yearly chart, as you can also see, like in the first gold bull market, we had 2 of these RSI, extremely high RSI readings. And in the second gold bull market, we had it, but in 2009 it was already, and then actually gold still peaked 3 years after. So it was still like a couple of years, and there were like more peaks we are going to zoom into for you to see. So even the 1 year RSI, even 1 year time frame confirms what I've already think. And this is the quarterly, and there you can see it even more clearly. The last gold bull market had the first peak and the second peak. And then in 2073, first peak or 4, and the second peak at the end of the decade. And it was really interesting that the gold really, the final peaks really comes at around the change of the decades. So the first time it was 1980, and the second time it was I think the peak actually happened in 2012, but 2011 I think it was as well. So around the change of the decade is when this gold secular bull market will peak completely. Another also kind of anecdotal evidence I have for this, that's my personal anecdotal evidence, that pretty much, like, I don't even count the retail. Retail is somewhat bullish about gold, of course, but somebody has to be buying. But so many people I see around on the market, people are generally pissed that they are missing out on this gold bull market. They are pissed. And when people are pissed like this is not a sign of the top, of the secular top. It might be that sign because of this extremely overbought reading. It might be, as I write here, we are in the process of making the first peak, but not the total peak. This is not, in my opinion, we are not making a total peak in gold. And watch my yesterday video where I actually analyzed quite in depth where do I believe that where do I believe, also when you look at this is the quarterly. Like on quarterly you can make a case that the parabolic move for gold started absolutely in 2023. So that's probably the correct reading, in 2023. And the gold, like, if this was the top, but probably it wasn't the top, by the way, the top will probably this year be over 6,000, maybe 6,500. I'm not going to do, I have to do another video about it, but even then the gold should return to 4,200 and probably even undershoot that a bit. So 4,000 gold is realistic, guys. 4,000 per ounce. So my puts that I own that are long term, I think they're going to become quite valuable. If we are going to see 4,000 per ounce sometime next year, then definitely they will. But I want to show you one other chart, and this is the last one we have the time for today. I used to analyze this, by the way, when nobody 40 people saw that. And this is gold divided by M2. There is also another chart, gold divided by the Fed balance sheet. So as you can see, this chart, just look at this. You can't make this up. Look at this touch at 0.236. You get this touch at 0.382. Look at that touch. Look at that touch. You can't make this up, guys. I think there is just so much evidence this is working. And now looking at this line to be resistance for so long, I think this is where the gold will find a footing before the final leg of the gold bull market. The final leg of the gold bull market could be somewhere to here, in my opinion. And if you, it could be like plus 40%, but divided by M2. So I don't know what the M2 is going to do in that time. Presumably it's going to go up a lot. So it's going to be much more than 40% from where the gold is. So a 5-figure gold is probably going to be the top of the gold secular bull market, and it will occur. Let me write this into the text, guys. This is a point to take away. As much as you might be pissed to see this, which proves the point that this is likely. So the top of secular bull market for gold around the end of the decade in 5-figure. Is it 5 figures? 10,000 plus 5 figures. Possibly even 20,000 USD per ounce. So, point to take away, guys. And one last thing before I have to turn this video off, because 10 minutes is the limit that I set myself. Let me switch this chart to logarithmic. This is logarithmic Fibonacci and logarithmic. Let me write this. This is logarithmic Fibonacci and logarithmic scale. And again, look at the beauty. You know, a touch. Even here was a touch, but this was basically a touch. This was a reaction, and the 0.5. This was a perfect reaction. You know, I would not have drawn this better even if I tried. And the market drew this, not me. Look at this beautiful rejection from 0.5, and 0.5 is the most important. So return to 0.5. That's what I'm shorting. This is what I want to make money on. And I think this is going to occur. Okay, and let me write one more point here. Return to 0.5 on this chart, likely in 2027. Let me write 2028 at latest, but I honestly think it's going to be 2027 more likely, but let's just write also 2028 just in the very case. So both of these scales work like regular and logarithmic, and both are showing something extremely interesting and valuable. I hope you enjoyed this video.